if the market wasn't as in play, we would look at earnings stocks. Those would be our first choices. But today it's a little bit different. I think so. I think most of my trades are from the game plan summary. And that's why. And the other thing is, what I'll do, and I don't think I have any slides with this today, is if I have good levels on my second days and technical setups, I'll just put in a script to, if I know Apple at 92 is major support, I'll just put in a script to buy Apple 92.10. I have a stop below 91.70, and then I'll have sell 30% at 93, sell some more at 94, and I'll just put in those scripts because our platform gives you the ability to basically kind of build these trades based on your setup. Okay, I touched upon this a little bit when we looked at the scanner. New traders, we want you to be in things that are very liquid. Things that normally trade 5 million shares a day, under $50. The spread is going to be narrower. Stocks under $50 trades over 5 million shares. The spread is going to be 5 cents at most. It's going to allow you to control risk. It's going to allow you to learn as a trader and develop. Junior traders, million shares under 100. So the way that we do this is we go into the scanner, we just click on the filter button, and you just put in your criteria. For me, as you can see, I put in minimum average daily volume, 200,000 shares, minimum price, $10, minimum ATR, volume factor, gap, etc., float short, all these different things. That allows me to customize my filter in the pre-market to show me the stocks that fit the criteria that I'm looking for. Yeah, Adam, I actually never read Adam's book, but Adam used to work at SMB, so I caught 90% of the stuff in the book are things that I've discussed with him when he worked with us for a couple of years. And it is probably, I hear it's a very good read. And so I definitely could recommend that. Question on the spies is squeeze daily back in August. Oh, so yeah, the market's kind of more broken now than it was. So typically what happens in a market, when we went down like this in August, the first time you kind of break and crash like this, quite often you'll have a really big bounce, then you'll have some sort of retest like we had, and then you'll move back up. You either fail at the bottom of this consolidation, which we did initially, but then we gapped above, and then we failed at the top of it. But the second time you roll over like this, that's from a structural standpoint is really bad for the market. And so really my focus has been, since the beginning of the year, since we gapped below 200 here, has been, the market breaking down. We did break down below the August low. We had a little bounce where we focused on the market rolling over again from 94, 95. Certainly today you can argue we put in a higher low from the low of January. Most likely that's going to get taken out though, and we'll see. I was kind of thinking mid 170s on the spies, 174 to 176. I know people at some hedge funds I know are a lot more bearish. They think we're going to the 160s. I certainly think we're going to. The probability is that we do take out this support this morning. Yeah, we'll see. We certainly haven't closed below there yet. That's been the support for the last couple of years, since going all the way back to the spring of 2014. But we take this out here, somewhere kind of in this area here, 170, 178 to 175. If you're looking to buy stuff longer term, to me, this is going to be a great. Looking at like 1 to 2 years, buying in this area here would be phenomenal. Some people are probably buying here in the 80s, thinking that eventually we'll get back up to 210, 220. But I think from the risk reward standpoint down there. Back to the house getting in. So we want to make sure our skill level determines which stocks, types of stocks, characteristics we look at. Just want to go over these things again. Pre-market volume, very important. Something is doing 50 to 100% of its pre-market volume. Excuse me, if its pre-market volume is 50 to 100% of its average daily volume, that's usually going to go right to the top of my list for something to trade that's in play. The strength of the catalyst directionally, meaning did they just blow out earnings and raise guidance 20%, or did they miss earnings and lower guidance by 20%? That's, now we talked about that with KSS earlier. Short percentage, we want a good short percentage. We just want it to be too crazy. Above 10, between 10 and 30%. Those are good short interest that's gonna help us out in terms of making it in play. Technical setup, does it have, is it a really good technical setup where a lot of people are watching it? For example, just the market itself. The market below 187 is a great short, right? Unfortunately, what they did and what they do a lot of times is they gapped us $2 below there. So you didn't really actually get to play that from intraday. But if this morning we opened up where the futures were last night, around 188.5, and then we broke below 187, you short there, risk 30 cents, and then you capture that $3 down move. That's a really nice technical setup. Are traders or investors trapped? We talked about that a little bit in the KSS example. And the idea was we were gapping below this area where, look at this stock was being accumulated at $44, had broke below, did a lot of volume, probably people hit out on this area, this high volume, some people, but then, okay, it's right back above, it held it again. All these people are buying this stock between $44 and $48, and then it gaps down to the 44 area. People are trapped. Short-term traders are trapped, hedge funds are trapped, everybody's trapped. That's a nice setup. Then there's like all market participants. Hedge funds with $1 billion+ where they're in large positions, large traders. It's one of the people thinking that are getting into these positions or getting short these positions, and what would they do if this stock starts behaving a certain way? Whether it's breaking down below a certain level or it's breaking above a certain level, are people going to try to cover their positions, get out of their positions, get into positions? And my mindset is, what are a lot of large market participants trying to do? And I'm going to try to take advantage of what they're trying to do, as opposed to being on the other side of what they're trying to do, which is very difficult. Yeah, I think what Luke is saying there to Tyler is probably good advice. So I'll talk about this a little bit. I'll expand on what I think Luke is talking about here. So what's a stock that was, I don't have view up on my E-signal charts, but let's take, for example, what was that? In the stock, it was DXCM. Okay. So this is a question in the chat about an entry, and Luke was talking about this idea of VWAP. So if you're trading DXCM and you're looking to get shorted, in other words, you didn't short it on this opening drive down, what you want to do is perhaps the VWAP is 54, and so when it's down here at 53, you're waiting for it to move back up to 54. And when it comes back up here to 54, you're shorting it. And that's because the stock that's trending in a particular direction, when it moves back up to its VWAP, that's a good entry. Where I look at it is, stocks generally fail at whole numbers, and when I see it fail at 54, that's going to be, and this was such a good stock today. And then it was really, really tight at the lows here and went down a few more dollars. Really, really good. I didn't look at the radar at all today because I had my hands full with the market, my 3 or 4 things that I was watching. So I think that answers that question. Yep, Carlos, exactly. When the price gets in a support resistance level, value, that's another good spot to enter. And the reason that is because there's other people looking at it, or the reason why that became an important support resistance level is because there were large orders there, and it became support resistance. Meaning it was either sold there or bought there because there were a lot of large orders. So from an intraday perspective, things that are trending that we trace to the volume weighted average price for the day, or things that we trace to key support or resistance areas, those are going to be your best risk reward entries. That was just my 3 time frame view. This is just part of the process. This is a multi-day chart. If I'm going to trade, Facebook on this coming into a day, I want to understand after the last week, this stock resisted at 49.50, and once it got above, it held there, it retested it. So I just want to be aware, if I'm trading this stock, that if it comes back down to that level, that I want to be aware of. We already talked about radar preparation. I showed you that live. The reason after we do our stock selection that we actually game plan, we don't really have time to get into this in detail, is if we've outlined our good support and resistance levels, if we've kind of outlined below this level we want to be short or above that we want to be long, and we have target areas, we're going to execute a lot better. If we don't think about these things in advance, we're just going to, on the fly, execute poorly. Okay, this is my contact information. Yeah, and that's Luke is actually making another nice point there, which is, perhaps he got this maybe a little bit from me. If something isn't at a major support or resistance or VWAP or whatever, trying to use the tape at some random price is not going to be particularly helpful. You want to use the tape at an important price is going to allow you to get a lot bigger if you're seeing support there, resistance there, big sellers, big buyers. So that's a really good point that Luke is making. Yeah, Carlos, so that's going to depend on the trading style. Somebody like Swang, we can kind of see, if we go into real time here, Swang, let's take a look at Swang. These are the things that he traded today. He traded about 15 different stocks. You can see he's long China in his long-term account. He's a momentum scalper, and so he's going to make literally hundreds of trades a day. Especially, by the way, market conditions are also going to dictate how many trades you're going to make, because in an active, volatile market, bear market, most of your trades are going to be move to move. And so that's going to dictate as well. In a slow market, where you're intraday trend trading, more focused on swing positions, you might only make 10, 15 trades the entire day, maybe less. So it's really going to depend on market conditions and style. And that's something, if you're new, I really recommend you go through a mentoring program and kind of learn how to develop a playbook, develop your trading style, have a mentor kind of give you feedback, your personality is going to kind of be the main thing that's going to determine your trading style, and then market conditions within your trading style will dictate. Some traders, a less active short-term trader might do somewhere between 10 and 30 trades a day, and that range will be determined by market conditions. The next DNA class, I think, is in about a month. I think it's some point in March. But I think if you go to, I was going to say, if you go to the DNA, go to smbu.com and go to Program and DNA. If you go to that page, just put in your information for the wait list, and you'll get emails when we're getting close to starting. I think Bella was long CTSH today. I'm up in real time because I think on the open it flush put in a low and then it started to get accumulated at higher levels. And so I actually think he was long it. Maybe he was stopped out. But basically, I think on the open it supported this 53.5, and then it supported a little bit higher, and then it was supporting a little bit higher. And so eventually, when the market sold off, it kind of broke that trend. And I'm pretty sure it was actually long it because it generally follows the intraday trend. And so the intraday trend was low was put in right on the open, higher low, and I think he was trading it for potentially to go back up to the morning high. So maybe he got stopped out when he broke down here. And if you're asking over all the time. Right, Carla. So, and then again, those are other things, that's an in-depth thing, but traders develop a process for how much they're going to risk per trade and their daily budget. And that's something that they learn as they go through trader development. So to me, the big takeaway today for you guys should be that we're looking at stocks and setups that give us the best chance to make money from a risk-reward standpoint. We can control our risk. So I'm not going to necessarily jump into a Google. I'm not going to jump into a LinkedIn if I don't think those things allow me really to control my risk well. Unless they set up so well technically, they set up so well in terms of their consolidations, they're so tight where I can identify a level where I know my risk, I can lower my risk to maybe $1, and I'm still looking at $10 to $20 of upside. That's what's going to get me involved. Things that can scale. Well, obviously, if we're making technical SPY trades, those can scale. We have traders on the desk trade 20 to 40,000 shares of SPYs. That's very scalable. If you want to even get bigger, we have now our better traders trading futures. So you can trade a couple hundred futures contracts, which is like trading 100,000 SPYs. Those are definitely going to be scalable. Trading KSS, when that has fresh news and it trades 20 million shares, that's scalable. You can have a 50,000 share position in KSS. You can have a 100,000 share position in KSS. That's scalable. You might start with 200, 300 shares, but that's going to be scalable longer term. Make sure you're dividing your plays into categories. Fresh news, technical plays, secondary plays, and understand when you're crunching your numbers, which our traders do every day, they crunch the numbers. What do the numbers look like on your, are you really do you do much better on your secondary? I remember a trader came to me once and he said, I just can't make money on the fresh news stuff. Perhaps they're not that good on momentum, they're not great at their order execution skills. And so they spent 70% of their effort on secondary plays and only 20% of their effort on fresh news because they just didn't have the execution skills. They weren't good momentum traders, but those second day trends, second day off the key levels, they were really good. And so that's why you want to kind of divide those up into categories. Chris, I will answer that question. Right, and so that's why you want to divide. That's why you want to go through the process of coming up with these categories, because if you can identify which of these you're trading the best, you can actually scale those things up more. You can still work on the other things, and you want to work on the other things. You want to be a well-rounded trader, but understanding where you make most of your money. What I was going to see is there. So I'll give you one more example of a trade that I took recently, and it was Coach. It actually came back down to the level where I got long. So Coach came out with earnings a couple of weeks ago, and the stock had been a long-term downtrend, and I knew that it had a lot of resistance at $34 a share. It hadn't been above there. It failed there about a month ago, failed there during this downtrend. And so what I did was I put on a swing position when this day here when it broke out above 34. And I got flat into 37, and I think I got short. I don't remember what I did. I don't know if I got stopped out of my short or before it actually reversed and came back down. But it had a catalyst. It was sold. Here's the day of earnings. People sold it ahead of earnings. The numbers were good, so I like that. In other words, people got out of positions in ton of earnings and numbers were good. I had levels to trade against. The risk resistance, a couple days before earnings was 33.20. It got above that. The next day I got above longer term resistance, so I got put in a swing position. It actually tested that 34 twice later in the day, and it closed above it, and it ran up a few more dollars over the next few days. I got out, as I said. I got short. I honestly don't remember what happened with the short. I can't remember if I got stepped out here, or if I came back down and I covered it. That was a position that I took recently. And Luke is sharing some advice with me, which is always nice. And Luke, I believe Luke is studied with us and understands. He's a short-term trader, and so he's talking about things that work for him. This is thanks for sharing. All right, so my throat is done. So that's it. So that's my process. All of these things that I showed you are part of all the tools are part of SMB Real-Time, which is part of Trader 90. If you want more information on the various tools in Trader 90, just go to the website smbu.com and click on under tools Trader 90. We spent many years and a ton of money and resources developing these tools. They're priced extremely reasonably. The tools include everything from my morning meeting to the live audio feed to the radar, to the written game plan, to a bunch of other new things we added, ideas from our trainees, spreadsheets, their best ideas. If you're a short-term trader, intraday, swing trader, there's a ton of value there. So check it out. Cool. For those of you who are already part of it, I'll see you for the morning meeting tomorrow. And thanks for joining me again. Yes, scanner, yes. Thanks, guys. Bye.